Let's check in on shares in Lundin Gold, LUG. Company just released a feasibility study for its Fruta del Norte project in Ecuador. It's going to cost about $670 million to build this mine, according to the company. And it's pretty sizable. It's going to produce 340,000 ounces of gold per year. Went up and running in 2020. We're joined by Ron Hochstein, President and CEO of Lundin Gold. Great to see you.
Great, thanks. Thank you for having me.
Just remind us why this Fruta del Norte in Ecuador is a big deal.
It's a big deal for the country of Ecuador because Ecuador really does not have a large-scale mining industry. And it's not very often you work on a mine and you say it will have an impact on the GDP of the country and a large impact on the province that we're in.
Right, and it's a rich deposit. That's pretty high grade.
Yeah, FDN is one of the highest grade undeveloped gold deposits in the world today, and it's got the potential. We're doing some exploration right now on some other areas, but even the deposit itself has the potential to grow.
Now, you're assuming $1,250 gold. Is that a bit aggressive? Because remember, at the beginning of this year, gold was threatening to drop below $1,000.
Yeah. Well, I think the thing is when you're doing a feasibility study, you're looking at where is gold going to be in 3 years when you start production. So where it's going to be, who knows? But what we've done, though, is assumed the $1,250. That's pretty well, if you look at analyst forecasts, it's pretty well in the middle. But what we really focused on is that we're building a deposit because of its high grade and building a mine that can handle $1,000 gold and be a great producer at above $1,250.
So this thing would be okay at 1,000, the economics?
Yeah, this thing will be okay at 1,000 because of the grade. As you mentioned, it's a great high grade. Our average grade we estimate will be about 9.7 grams per ton, which is going to put us up into the highest grade operations in the world.
Sorry, what was it? How many grams?
9.7 grams per ton. Yeah, average grade. We have some areas that'll be up to 15, 20 average grams per ton, which show. I mean, our gold production average is 348,000 ounces a year. Pretty flat at that, but we do have years where we get up over 400,000 ounces.
And your all-in cost is in the 500s, I think.
All-in costs are in the 500s. That's an area we still feel, Andrew, that we've got opportunities to improve because we need to do more work in the mining. We had a hard deadline to get this feasibility study out by next Friday. Based on the government requirements, we still feel we got opportunities to reduce that mining cost, which will bring our overall operating costs down.
But overall, though, I think life of mine, your all-in cost is north of 600, is it?
That's the all-in sustaining capital cost is just north of 600. Okay. That still puts us in the lower quartile in the world in terms of operating mines today.
Now, you big shareholder of the Lundin family, and they're great at kind of doing projects in tricky jurisdictions. Ecuador, Kinross couldn't make this project work. So you've struck a taxation deal with Ecuador that in some ways is more generous than other miners around the world.
It is. It's actually, I think it's a fair taxation scheme. When we look at it now today, people think that Ecuador is complex and a higher tax environment. With the feasibility assumptions we have today, the effective tax rate over life of mine is 29, just over 29%, which is very competitive with most mining jurisdictions in the world. And that includes the royalty that we would pay. So Ecuador has made a lot of headway in terms of making their mining and fiscal regime much more competitive with, in particular, Peru and Chile and other Latin American countries.
Maybe we can put up the map again, but you're pretty close to the Peruvian border, and it gets pretty hairy down there with illegal mining, criminal gangs in the Peruvian mining space. So how far away are you from that kind of stuff?
We're only about 10 kilometers away from the border with Peru, but the areas I think you're talking about is more northern part of the country and further up in the Amazon basin. Where we are, when we look across into the border of Peru, it is pure jungle. There's Ecuador side is we're line power, highways. On the Peruvian side, it's still pure outright jungle. There's not much impact there, not much activity in that part of Peru at all.
Now, there's obviously been enormous attention within Peru to this project, because as you say, it's kind of a standard bearer. There must be concerns here of political risk and a future government perhaps increasing the taxes you pay.
We've formalized an agreement. We'll be signing that here by the latest January, possibly this year. That agreement has several factors in it to protect the company, such that we are agreeing to here's the taxation scheme we have today, and that's what it's going to be, including ability to adjust other taxes to ensure we're held whole, and even up to arbitration So I think we're feeling we're very well protected in terms of what we have today. And also the government has changed and is very supportive of mining in general.
Although, I mean, we know that Aboriginal groups in the past in Ecuador have blocked projects, resource projects. How confident are you won't have those kind of problems?
We've got essentially we have tremendous local support from the local communities, the local indigenous group they're called the Shuar, and even the Catholic Church is very supportive of the project. Kinross and Aurelian, the previous owners, did a very good job. We've stepped in just to continue that work. It's something that's a big focus for us, and we continue to be essentially very focused on ensuring that we have strong local support.
So your market cap run now, I think it's around just under 700 million, and you've got to raise that much to build this mine. So how much equity do you think you'll have to issue?
Well, I think that's one of the things. The mantra of the Lundin Group is minimize dilution for our shareholders, and so we will continue to look at other opportunities. Right now, we're looking at several for some initial financing we're doing, and but the key is minimize dilution for our shareholders.
That music to the ear of some investors, I think, these days. Ron, thanks very much.
Thank you very much.
Ron Hochstein is the boss of Lundin Gold.